Dear students, welcome you to session 41, chapter Dividend Policies, 6th semester BCom, Financial Management, Mangalore University. Chapter 4, Dividend Policies. The primary objective of the firm is to maximize the wealth of its owners, that is, the shareholders. The firm generates cash flows from the successful operation of the business, which are used for the payment of dividend to the shareholders. So, dividend refers to that portion of the firm's profit which is distributed among the shareholders of the firm. It is the return on equity given to the shareholders. So, the dividends are paid according to the policies and decisions of the management regarding the retained earnings of the firm. So, dividend policies or dividend decisions are one of the more important decision areas of the financial manager. So, it is the decision to pay the dividend to the shareholders or to retain the earnings in the firm. There are various factors affecting the dividend policy. The main among them are the first one, the policy of the company. The policy of the company decides the dividend. In the sense, some companies may follow a conservative dividend policy wherein they pay a very low rate of dividend consistently, or the firm may pay liberal dividend policy wherein huge amount of dividend will be distributed to the company, or some companies may follow a policy of no dividend wherein dividend will not be given to the shareholders at all. So these policies of the company affects the dividend policy. The next thing is the stability of the earnings. When the firm earns stable income, the firm or the company may be able to pay constant dividend to the shareholders. When the earnings are not stable, then the company may pay huge amount of dividends when the earnings are more, or when the earnings are less, the company may not pay dividends at all. So, the permanency or constancy of dividends may not be there when there are unstable earnings. The liquidity of the company is another aspect affecting the dividend policy. That is, the dividend payment, it involves the cash outflows. Now, in order to pay the dividend, the company requires cash, and the availability of the cash resources within the company will be an important factor in determining the dividend payment. It does not mean that the company should be in a profitable situation. The company should have enough cash at its hand in order to declare the dividend or pay the dividend. So, if the company has sufficient liquidity to pay the dividend, it can declare high dividend. The past dividend rates also affects the dividend policy. So, every company takes their last year's dividend or the previous year's dividend as the base, and decision is taken to enhance the dividend in future. So, the last year's or future the past dividend rates is an important aspect affecting the dividend policy. The projects under consideration. When there are big projects under consideration of the business firm, the company will require huge amount of cash. In such a case, the dividend payable will be very less. That is, the dividend payable may be moderate under such a condition when the company has different projects under consideration. The market expectation is another aspect which affects the dividend policy. Where the expectations of the investors are high in the market regarding the dividend should be declared accordingly. Otherwise, it will be affecting the market price. The reinvestment opportunities of the company. The availability of various profitable investment opportunity of the company decides the payment of the dividend. That is, if the firm has more profitable investment opportunities, then it is better for the firm to retain the earnings or to declare a lower rate of dividend. The next aspect is the legal restrictions. The Companies Act requires the companies to transfer a certain amount of general reserve based on the rate of dividend. So, when this rule is applicable, the lack of surplus fund to be transferred to the general reserve after the payment of dividend will put a restriction on the dividend declared. The accumulated reserves. The companies which enjoy huge general reserve or reserve fund can afford to declare high dividends. At the same time, the growth needs of the company also affects the dividend policy. A company which will plan for the future growth as well as the expansion, it requires huge funds, or such firms will always feel that it is better to retain the earnings than to declare the dividends. Bonus issue is another aspect affecting the dividend policy. The bonus issue in the past year, it actually increases the capital base in the current year. Hence, the dividend policy should be determined on the basis of the bonus shares which are issued. Now, a company also has to pay a dividend compulsorily in the year of bonus issue, because a bonus issue cannot be in lieu of cash dividend. As per the rules of the Securities Exchange Board of India, when a company wants to issue bonus shares, it has to give the cash dividends to the shareholders. And the restrictions of the financial institutions. Whenever a firm goes for loans or term loans from the financial institutions, these financial institutions may keep some restrictions on the payment or declaration of the dividend. So when firm goes for loan, the company will have to follow these restrictions imposed by the financial institutions, and they may have to reduce the rate of the dividend. So these are the various factors affecting the dividend policy. Thank you.